My channel. My name is Neeraj Lahoti. You're watching Neeraj Decoach. So Q4 season has started, and I'm back with a video where I'm discussing excellent set of numbers, very good financial performance, YOY quarter on quarter, robust set of results. I'm talking about IREDA, Indian Renewable Energy Development Agency Limited, India. Okay, so TCS numbers started with TCS numbers, then Anand Rathi set of numbers. Both were not that great, not that bad numbers. Mild set of numbers. I'll discuss TCS numbers probably with Infi numbers. I'll compare both TCS and Infi. Infi is declaring probably on April 18th, if I'm not wrong. So I'll discuss TCS numbers and Infi numbers on April 18th. Now let's start with these numbers, IREDA numbers. Prima facie, I saw good set of numbers, but then let's take a deep dive and understand how the numbers are in real. Okay, so starting with revenue from operations, interest income, net interest income probably 1861 crores versus 1328 crores last year. Last quarter was around 1654 crores. Or probably if you see YOY, 57% odd growth, 58% odd growth. In NII. Other income probably is lesser this time. So your total revenue from operations is 1904 crores versus 1698 versus 31. So 19 odd crores is less from the last quarter. So probably my total revenue is less, and my expenses would would grow quarter on quarter or even year on year. So my profit actually, if I have to compare with respect to this revenue, I'll have to add more 11 crores probably. Okay. But let's see. We'll restate the numbers again because my set of understanding with results is like this. You have to compare quarter on year on all basis. Otherwise, they don't make sense. Right. Uh, Expenses 1284 crores versus 1160 versus 911. Nominal growth, not really anything to discuss about. Exceptional item, no exceptional item. Tax expense, that's a reversal in deferred tax. That's also probably a lesser amount of reversal. So lesser amount will again be adding to your income because this is a reversal. So more, last time it was about around 45. Last year it was around 14 crores. So take a 3 odd crores if I want to compare year on year. And last year was my operating income was around 50. Non-operating income was my 51 crores. Right? This year it's 40 crores. So 40 crores I'll add up in the other income, and then I'll kind of add more 3 crores here in the deferred tax. So around 43 crores I have to add to my profit. So profit or loss for the period 502 crores versus 337 or versus 425 last quarter. So this should be probably around 545 crores profit versus 337 crores. So excellent jump in profit, around 48% growth in profit. A good growth in again your quarter on quarter is also a good growth in your profit and also in revenues. So that's why I'm saying you excellent set of numbers. But this is primarily an NBFC. Okay, primarily if you see this is what this is an NBFC. Okay, but it is more into solar. So that's why probably people think it's a solar energy distributing company. No, but it's an NBFC. Okay, so for this, the important measure is always the one thing that is NPA, non-performing assets. So probably it will be after your cash flow statements. Here, if I see, yeah. So gross non-performing assets ratio is 2.45 percentage versus 2.36 percentage last year. So year on year, it's a slight increase of 0.09 percentage. And if you see net NPA 1.35 versus 0.9, that's also an increase in net NPA. But quarter on quarter, if I see, both are on the lower side. Last quarter it was around 2.68% NPA, and gross NPA, if I remember correctly, it was around 1.48%. So quarter on quarter decrease in NPA, year on year it's slightly on the higher side. Now NPA, this is an important thing to discuss. A really good set of numbers. NPA is on a bit of higher side. That could be a profit booking on a if it's on 10% of upper circuit or 15% of upper circuit. Because it's in F&O, there's really no limit. But then I don't think it'll it'll increase more than 10%. There'll be profit booking on this part on the increase in the NPAs. And also today you got the news about the Gensol engineering promoters have been banned. So IREDA has an exposure to Gensol. Gensol engineering exposure is around 470 crores. 250 crores loan plus working capital is around 415 crores. Other 215 crores. So if you add up, it's around 470 crores exposure. for IREDA. That's around 0.7 percentage of the total loan book value. It's around 68,000 crores of loan book value, and exposure is around 0.7% of whole of the book value. If you see for Gensol. So I think last week or before last week, when ICRA, ICRA, and your CARE has downgraded the ratings of Gensol, the stock has already reacted on that. So net exposure is now around 250 crores because they have paid up around 210 crores. Gensol has paid up. So net exposure is 250 crores. Now that could be an impact where there's an increase in NPA because probably they've not given any disclosure, but probably they have accounted or written off the Gensol engineering numbers. So that's on the higher side, is what I feel. You need a clarity on this. Otherwise, overall excellent set of numbers. Let's see how the stock reacts tomorrow. But a really good company, IREDA. Let's see how the stock reacts. That's it for today. We'll again be back with a very good set of numbers, and also companies where more of the retail investors are involved. We'll discuss those kind of companies, and also companies which have given excellent set of numbers. So I'll discuss both and keep you updated. Just keep on liking my videos and subscribe to my channel to stay updated. That's it. और कुछ नहीं करना. Jai Hind. Good night. Bye bye. Bye.